Shit. I have no fucking idea how this works. Give me a sec. Okay, I'm gonna try to put a chat on. Hold on. I have no idea how to do this. Yeah, let me just do this for like 2 seconds. Edit. Let's go on OBS. Yeah, fuck knows. Just gonna have to like not do that then. That's great. It's just what you want, isn't it? Okay, anyway. Fuck it. Let me just see if everyone can hear me, and then I will start. Excellent. Okay, anyway. Wait, Huz, I know you're in here. How did you even know I was doing this? Anyway. Okay. No idea. I probably got like 2 viewers, but well, I'll try to save this and send it into the forum anyway. But yeah. Anyway, I don't know how to get the chat, by the way. If anyone can let me know real quick, and then I'll start in like 2 seconds. Your mic is low. Okay. Higher the gain. What? Wait. Boom, 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 boom. Is that better? How do I work this? Let me know if that's better. Hopefully. Okay, I'm just gonna start anyway, because it's taking forever, so... Okay, I'll start. Alright, okay. So basically, all I was gonna do is, I'll do a live, one when it's like live fraction one time, live price action, because that'll be fun, but basically, all I was gonna do real quick is go over this price action right here, with the concepts that I've explained in a forum, wherever you're from, and show you how you can literally catch like the majority of these swing points, and it's really, really easy. The most important concept is obviously time frames. That's the main thing you have to really master, and I've talked about that before. It's just the range and control thing, and you need to learn to be flexible with this, and I'll show examples of this. Be flexible. So what's the date this week? 27th. So okay, so this is Monday. I'll go from Tuesday to Friday because Monday was pretty ass. So I'll go over this portion of price action. Okay, So basically, one of the things, let's first of all start from a high time frame. Okay, that's just my risk management. So let's just get rid of that. Weekly is obviously bearish, daily bearish, and we've made a lower low here, right? Let's get the magnet going. So our daily structure is from here to, oh, piss off, here, right? And our H4 structure is from here to here also. So really right now what we're trying to determine is, if are we going to get a retracement? And the way we're going to determine that usually is from a H4 break structure, but H4 is all the way up here, so why would we wait for H4 to break structure? Because the retracement's already going to be complete by the time we get here. So because H4 is really far away, we can use H1, right? So H1 structure, as we can see, we did have that breaker structure, which doesn't mean daily retracement, it means H4 retracement. But you can hold some of these H1 buys to the potential daily levels, because you know that could happen, but you've got to take volume at H4. So let me explain that. So for example, if, let's use this as daily is range, H4 is control, and you're entering one below control, which would be H1. If you want to hold these to daily, so let's say you want to hold H1 positions to daily, you have to take volume off at H4. And then monitor at H4 levels. Does H4 show distribution? If not, then we can hold the remainder to daily, and then we close it daily, right? Just want to say that like H1 does not mean daily retracement. It only means H4 retracement. We have to monitor at these levels, see what shows, etc. And the key level for me would be the breaker, unless we get some sort of H1 breaker structure, H1 distribution before we get to this level, which this doesn't look healthy in terms of bullish price action. But anyway, so just wanted to say like H1 does not equal daily. You've got to really use that multi-time frame. You've got to learn it really well, because once you learn that, everything is really, really easy, right? So first of all, this was key liquidity. We ran previous day's low, so you could have held these buys to here, but I'm not going to go over that because that's a bit more, in quotations, advanced. It's not really advanced, but so we'll go from where we broke structure. Okay, so we broke to the upside, which means H1 is bullish, and I've gone over this before. This becomes your structural point, so here to here. Why is this your structural point and not this one? Well, this should have made a lower low, but it failed to create a lower low, so this becomes your structural point. So ideally, we want to see buys from levels above this low. Okay, so you can be looking for accumulation within this range, high to low, because now H1 is bullish, we can target H4 levels, and on a H4 perspective, this is all internal range liquidity, so we can essentially target all of this. So we want to be looking for accumulation within this range. Really simple. One thing that can happen, which is exactly what happened here, is typically you will see that's like perfect price action, okay? But one form of accumulation is an SMT divergence with the dollar. So if we take a look at the dollar never took the high right here, whereas EU took the low. So that's obviously an SMT divergence, which is a form of accumulation. So it's not a breaker structure, it's just accumulation, and there was confirmation of this on low time frames. So before people bite my head off, I'm going to talk about Wyckoff, because that is like it just works. Like, I don't know what to say. So the key here on Tuesday, I think this was Tuesday or Wednesday, was understanding H1 is bullish, really simple. We can clearly see that H1 is broke to the upside, and now we can target H4 levels and then monitor at H4 levels. So we've got all this liquidity to target for the week. That's your entire week's bias complete just by understanding H1 is bullish, let's target H4. Okay. Now we use our structure to frame our entries. So we wait for price to pull back, we wait for some low time frame confirmation on M15 because H1 is range and M15 is control. And we have, first of all, let's go over this pullback in general, okay? Let's go back to H1. So our H1 structure is from here to here. Let's look at M15. M15 is also from here to here. So like I've explained in the thread, when two time frames are the same structure, it has to change, and it will be the lower time frame. So H1 is range, and M15 is control. M15, which is control, must change structure when they're the same. Because if we look at M15, M15 was lower low, lower high, lower low, break structure, this failed lower low becomes the structure point, we've got a new break structure, and then low low, failed, low low, so this becomes the structure when we break to the upside, which is the exact same as H1, and obviously that can't happen, so now M15 starts to become, oops, like this, see that? And at no point did M15 break to the upside, so where's the highlighter? Okay, so we had boom, 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 and you can clearly see this is bearish structure, right? Until we get that breaker structure. But along the way, as this is forming these lower lows and lower highs, there were sells in here. I'm not really going to cover them, but bearish structure, there's an SMT here. Use your low time frame, there's an entry there. I'm going to cover the buy though. As we're retracing here, we're looking for accumulation. I've shown multiple forms of accumulation. So you've got obviously ICT shown as SMT divergence. You've got the classic breaker structure. You've got Wyckoff, and then I've talked about the sweep on key liquidity, which is just that's a riskier one. The main ones you want to use is SMT divergence, breaker structure, and Wyckoff. So as we're forming here, we can see Wyckoff. If you pull up on Google a schematic of Wyckoff, you'll see this is a type 2 on the bullish schematic. Basically have preliminary supply. Well, I don't really know the terms, but just pull it up and you'll see that's the STB, and this is the spring, and obviously the spring happens when we make the SMT divergence. You don't even have to see this M15 accumulation anyway. You can just frame your entry off the H1 SMT divergence because that's accumulation, and once the SMT divergence happens, you want to be looking for some sort of accumulation. So typically with SMT divergences you can use, I don't know, I can't use this term, shit, because we're not allowed to use that. So I'll post it in the forum because that's one thing that I'm actually not allowed to talk about. But I did break this down. I will show it. That's really annoying, but I will show it in the forum. If you go onto M1 and M5, you will see an entry technique that ICT has talked about, and I will go over that in the forum. I even talked about it last week this week when the entry happened. But the premise is H1 structure is bullish, we're looking for accumulation, and obviously we had that accumulation through the SMT or through the control time frame. We're looking for that control time frame SMT divergence, and we had Wyckoff here. So you can even wait for the breaker structure, and then obviously IOFED, which was humongous but still valid. Okay. Yeah, that's really annoying because I didn't realize I couldn't talk about that. But anyway, you can see now we've had that M15 breaker structure. Our target is here, and again, look at our structure points. This was a okay, so let me talk about this. Bullish, high low to high high, and now we take out this low, so our structure point changes to here. So it's bearish now. Although this is bullish accumulation, our structure points still change. Keep that in mind. and this is a failed low low, so this becomes your structure point, which is really key, and then we make a new high high. So one thing that's important when you're looking at structure is key liquidity, which is really basic. Previous day's high, previous week's high, whatever. This is previous day high, 23rd, and this is, okay, here it is, 24th, and then obviously 25th. So previous day's high. So when we take these out, we can expect some sort of reaction, and we've made a high high here anyway, and I think that was Asia as well. So we have Asia high as well, so key liquidity again. Oops. And basically key liquidity, when we take out key liquidity, and it aligns with structure, so let's say we make a high high and take key liquidity, we can expect some sort of pullback. Okay, so we've made that H1 high high, and now we can expect some sort of pullback. And when I said earlier about being flexible with your time frames, ideally for a H1 pullback, we're going to see M15 distribution, okay? But you need to be flexible, which there was an entry here. We've made a H1 high high, M15 breaker structure. Why is this M15 structure? Well, M15 was here, so broke structure, high low, high high, high low, high high. We break structure, we take the internal range liquidity on M15, and this is where you need to be flexible. M5 structure is down here, okay? So we're not really going to wait for M5 structure to break. I mean, you can, but we want to enter up here when we've taken the liquidity. So we can drop a time frame down, and I posted this in the chat. You have just, oops, M1 breaker structure, liquidity feeding into your order block. And why would you not frame a setup within here? For example, why would you not frame a setup from like this order block, for example? Because structure is, let's go to a highlighter. Oops. On M1 is, oh, this magnet pisses me off. Like this, so why would he not frame a setup from here and target here? Well, there's no liquidity within this range right here. And if you see what I've posted in the forum, it's what's it called? It's the idea range thingy. Like, typically price will not move like that. You're gonna get like that, for example, and that's when this low is either like SNL liquidity, or it's got no liquidity feeding into this low, which will, in a bearish example, is this high. So you can just expect that to happen. There's no liquidity feeding into this high, makes it a weak high. We don't want to take a trade from there unless there's low time frame confirmation, and there isn't. So we can expect this high to be taken and this high to hold. So if you go back to the forum, it's like idea range or whatever it's called, and yeah, that's just idea breaker structure. We want liquidity feeding in because this is a weak high. No liquidity feeding into that high. That is going to be used as the liquidity. You enter above that, and that's just confirmation of your M15 sell. And obviously with M15, now we've had M15 breaker structure, we can target H1 levels because M15 breaker structure equals H1 retracement. Well, we outlined that our H1 structure is from here to here. So price on a pullback will typically take out order internal liquidity, and that's here. Okay, let me get rid of this shit. Really, really fucking simple. Just think about it. H1 breaker structure equals target H4 levels. So we're bullish until we hit H4 key level. Okay, when price pulls back, look for accumulation. Well, this happened through SMT divergence and M15 Wyckoff. And obviously, once we have that breaker structure, we can target H1 levels. Now we've made a high high. We wait for an M15 breaker structure to trade the pullback. Really fucking simple. And now once we retrace, we wait for M15 accumulation to then start the expansion. Okay, let's look at this. We have, as we're retracing, look at this accumulation. So we have like so, which is Y curve. I've talked about this number 2. So you have your essential spring here, which I've talked about in the forum. It's like there's type 1 and type 2, and also we know that this low should not break because this is our H1 structure. We're looking for accumulation before that, and probably people are asking questions like, why is this not a breaker structure? Well, like I said, breaker structure is a, how can I say it? It is a reversal pattern, but it's a weak one. If there's no liquidity feeding into the low, then it's a weak one. It for sure could have bought from here, but I'd rather see that, yeah, like the fake breaker structure essentially, because that's higher probability, if that makes sense. And also, which I can't talk about, is PD arrays, and like price had not hit the key PD array, although it had hit an order block. I don't really use order blocks like that. So yeah, maybe I'll talk about that in the future, but just know that you'd rather see this formation rather than the Wyckoff, rather than just a clean break, like a classic breaker structure. This one, where it takes out the low after the breaker structure, is more like it's higher probability. You want to see that more often, unless we have liquidity feeding into our low here, which there wasn't really. I mean, you can call this liquidity, but it's just over time you'll see from experience that's just not really that clean. So yeah, and also keep in mind this is previous day's low right here, which we take, and then it's really annoying because I can't go over the entry pattern, otherwise ICT will bite my ass. But I'll put them in the forum after and show you. But I just want you to show. I just want to show you how simple, and you could have caught this pullback as well. Just how simple it is from using range and control. We understand, once you understand what time frame you're working with in terms of structure, we're working with H1 here, you can understand how to get in through the lower time frame. We're working with H1, that means we want to be entering with M15. H1's bullish, let's look for M15 accumulation. Once we see that, we can buy to here. Now we've made a high, once we see M15 distribution, we can sell and target H1 levels. Once we get through those H1 levels, wait for M15 accumulation and target this level. Now once we've made this level, wait for M15 distribution and target H1 levels. And you use that with every single time frame. So obviously we're using H1 and M15 here, but now you can use it for H4 and H1. So once we get to H4 key levels, we can monitor H1 distribution. There's 3 things that can happen basically. You're either gonna hit your range, let me tap this out, tap into range PY and sell off. You're gonna either tap into range PY and sell through low time frame confirmation. Oops. Or you're gonna just sell off by low time frame confirmation. So there's 3 things that can essentially happen. What do I mean? Let's mark out our structure. Let's say this is range time frame. We're either gonna tap into the PD array and sell off. We're either gonna, like, this is how you can trade. You're either gonna put a sell limit here and sell, or you're gonna wait for price to hit this, wait for some low time frame confirmation and sell, or price will miss this, low time frame will switch and you'll start selling off. There's the 3 things that can happen. So with this example, if we go back to H4, 3 things that can happen. You can either place a sell limit here, which, please, I'm not a financial advisor, don't do that. Or you can wait for this to get hit, wait for lower time frame, or lower time frame can start to sell off before we get to here. There are 3 things that can happen. So yeah, just understand your time frames. What time frame are you working with? That becomes your range, and then go one time frame lower and use that as control. But remember, you can be flexible. Like, for example, if you're working with range time frame, control might be far away, so you're going to use one lower. But understand, though, if you're using one lower, this doesn't equal, let's for example, an M5 breaker structure does not equal H1 retracement or H1 expansion. Once you buy at M5, you're going to have to monitor at M15. Does M15 break? Therefore, if it does, we can hold the M5 buys and hold them to H1, because now H1 is confirmed with that M15. Just be flexible. Like, for example, on this day we had an M1 breaker structure. Okay. SNR, sell above the SNR, blah blah blah. And this M1 breaker structure played all the way to H1 levels, but obviously you're not going to hold full volume from M1. Before this M1 can get to H1, you have to break M5 and M15. So if we enter on M1 and we're targeting H1, we have to first break M5 and then break M15. So you're taking partials at these levels, because M1 does not equal, H1 levels. And if you want like a high consistency, high win rate, you're going to be waiting for these, M15, M5 entries rather than M1 to target H1, for example. But you can enter with M1 for sure. Just know you've got 2 obstacles to break before you get to H1. And obviously we broke those obstacles, so now, H1 can be played out too. But that's more aggressive. You're not going to be on the highest win rate when you use, M1 entries with H1 levels, but it can work. Just know that. And like I was saying before, we're working with H1 structure, right? Ideally, until we take these levels, of course price never has to get there, H1 can break and we can just start selling off. But from a probability standpoint, H1 is bullish, so for me I'm going to be targeting H4 levels. And as H1 breaks to the upside again, what is this? Previous day's high, so we can expect some sort of retracement. It's key liquidity. This week was just the same shit over and over again, okay? And obviously we want to see M15 distribution, right? So what do we see? Same pattern again as we saw here, the Wyckoff. And obviously it's not that clear on M15, but if you go on M5, it's because the news, it was super quick. But if you go on M5, you see, let me draw that out again, it's getting a bit messy. This from an M15, but it's clear on M5. Once you take this high, this is essentially the spring. Wait for that lower time frame. If you look at M1, it's the same pattern as here, and the same pattern as here, but obviously I don't want to talk about that on here in case some random guy is watching. But I will show that. Just understand. Let me go over this again. Understand. H1 high or low. Look for M15 accumulation, M15 Wyckoff. That means H1 expansion. Understand. H1 high. Look for M15 distribution. We got a breaker structure. That means H1 can now retrace to these key levels. Now H1 has made a high low. We wait for M15 accumulation. What do we get? Wyckoff. So now we can target H1 high. H1's made a high. What do we wait for? M15 distribution. We've seen M15 Wyckoff. Now enter target H1 levels. Where does price run to? Let's look at our structure. We have high low to high. Internal liquidity gets targeted. Obviously this is equal low, so it's a bit sus, so could leave someone for there and see what happens. But also after the M15 breaker structure, we had an IOFED, which again I don't want to talk about PDRAs, but on his liquidity feeding into that, which is really clean. But yeah, I just want to reinforce into your head the fact that like time frames is so it's all you need. Time frames. Once you master the relationship with time frames and structure, I would say these two are the most important. Understanding the relationships with your time frames and being flexible, and then identifying your structural points, and then obviously using key liquidity as context. This is all I use. Like, you don't have to be fancy, and you can see from the week you could have got every single swing point essentially on H1. It's a shit circle. Just from understanding time frames and structure. Like, I don't know what else to say. It's pretty simple, and you can like, yeah, I don't know. Like, I want to give some really advanced explanation, but I don't know. It's just so simple. Do you know what I mean? And it's nothing I haven't shown. So for all the people, like, bit of a tangent, I won't rant like ICT for like an hour, but people that like say fraud or whatever and ask for proof, I understand why you do that, but the concepts are proof in itself. Like, if you just study, like, that's proof for you. You'll see these things actually work, and me showing the same examples over and over again of the same things I've shown is proof. Like, I haven't used anything I haven't talked about before, and this week was so perfect because the time frames were aligned so well. Like, yeah, I don't know. Obviously, people like call me fraud because I come across as egotistical and cocky, and that's like a flaw. I should probably work on that, but it's because like this shit actually works, and I feel like ICT overcomplicates things, and that's just my opinion though. But anyway, I'm not trying to rant for ages. So yeah, I just wanted to show you that it's really, really simple, and obviously I just use this with a H1 and M15 timeframes. You could do this with M15 and M5, or M15 and M1 if like, remember, be flexible. So I'll just go over this. Typically you're using with range structure, and then your entry will either be control or one lower. If you enter on control, then obviously you're going to target range straight away. If you enter with one lower, you've got an obstacle. Okay, I don't know if you heard that, but anyway, what I was saying is, this is your key framework, okay? You're entering with your structure time frame is range, okay? And obviously, so this is range. To confirm this high, you're typically going to use, well, you're always going to use, well, I say always, I say typically, ideally, you're going to use control or one lower. So let's use this with real time frames. Let's say range is H1, control is M15, and one lower is obviously M5. Nope, that's wrong. Oh my god. Anyway, that is pissing me off. But anyway, that's ideally what you're going to use to confirm this expansion to the upside. If you enter on control, you have no obstacles. If you enter on one lower, you're going to have an obstacle of control. What do I mean? If you enter on M5 and you're targeting H1, M15 needs to break in order to get to H1. So if you're entering at M5, when like M5 equals, I'm going to draw this out so it makes sense, and then we'll refer to this type in, equals M15 retracement, and M5 EOS equals M15 retracement. Now we're retracing to M15 levels, we're monitoring, does M15 break to the upside? And we have to partial here. If so, then H1 can expand, and I'll draw this out real quick. So this is range. Control will be like so. Let's draw this in red. And we need a control breaking structure to get to our H1 high, and then let's say we enter with M5. Okay. So we've entered with M5, let's say from an order block or whatever, and M5 equals M15 retracement. So before we can get to this H1 level, we must study at M15. Does M15 now show distribution? If so, then close your buys because M15 is going to make a lower low. If M15 breaks, obviously we partial here by the way, we can then hold these to H1. And yeah, it's as simple as that really. Obviously you can use lower than that, but the lower the time frame, the more obstacles you have. And shit, yeah, I don't know. That's pretty much it. What the fuck is that? So yeah, we'll see what happens next week. So let's just go over what current price action is. Obviously we know H4 is retracing, H4 and H4. We know that H1 is currently bullish. So right now my objective is still this key H4 level up here. I want to see these equal highs get taken, but obviously this doesn't look too promising in terms of bullishness for H1, but currently H1 structure is still bullish. We do have equal lows, which maybe price will take these out or go lower, but it's either going to be an inducement or a breaker structure. And for me, I will go into next week and assume this will be an inducement. Obviously, once price takes out this structural point, you've got to determine, is this break structure or is this an inducement? Once price takes this out, our structure points will change. Doesn't mean it's a breaker structure, but it will change. So if we see accumulation below here, we don't want to see price stay below here for too long, blah blah blah. But once price takes this out, I want to see M5, M15 accumulation to buy. Once we buy, let's say there was M15, M5 accumulation, we're going to buy here. Look at our structure points. They've changed. So this becomes an obstacle essentially, because the structure points are bearish. Although we presume this to be inducement, we don't know that for sure because obviously our structure points have changed. So we have to study in premium, but essentially you would target here and study in here. But if there's no accumulation, there's no buy for me, because this does not look pretty in terms of bullishness. Just the way price shot off here. Look at H4 perspective, that does not look pretty, but all I can go off is structure. And this is the thing, if you held on to this buy up here, you could hold for these equal lows, but obviously that wouldn't be much volume, because for me I would just play the buys. But yeah, we'll see. So if we see accumulation below here, I will target up here. If not, then obviously these equal lows will probably get smashed. But yeah, the higher, if you want to go on the win rate and consistency streak, you're going to be using confirmation every single time. Figure out what your range is, figure out what your control is, use confirmation of control. It's as simple as that, and that'll be your that's how you're going to get high win rate, high consistency. Obviously people that say, oh, I got in through M1 on a H4 retracement, like, it's possible, but they probably lost 5 times. If that's all they do, they're probably losing 5 times before they get that, 1 to 50 or 1 to 20 or whatever, which they are real. But yeah, so hopefully that made sense. And one day we will go over, probably next week, I'll do like a live, actually probably not next week, I'll let you know, but we'll do like a live when the price action is actually running. We'll go over price action live, and we'll go over the simple shit, just time frames and structure, and that's it really. Just think about it in terms of accumulation and distribution is a reversal pattern. So accumulation / distribution is a reversal pattern, which is kind of your confirmation patterns. And then once you've had the confirmation, you can use your continuation patterns, which is like redistribution and reaccumulation. So for example, let's say this is our range, and then our control will be, let's say we got our reversal pattern, which is a breaker structure. Now you can use your continuation, which will be after the breaker structure to trade to here. If you want to be on, safest thing, highest win rate, just trade the reversal pattern. But if you, once you get confident, you can now use these continuation entries to obviously target this high. But I haven't gone over them yet, but probably will do in the future. But you could use the same. Let's say this range is H1, control is M15. Obviously, M15 break structure is a reversal pattern, which means H1 expansion. So this is your entry. But now we can play with M15 structure. So once M15 makes a higher low, you wait for an M5, M1 breaker structure, and then target here, so on and so forth. And the way I'd manage that is these entries, I would take probably 50 to 60% off here, and then hold for the H1 target as well, because obviously with M15 entries you can target H1. So yeah, I don't know, hopefully all of this shit made sense, and like I'm not using something different every time, just yeah, Wyckoff, breaker structure, Wyckoff, Wyckoff, and yeah, and then even if you're not convinced with Wyckoff, M15 breaker structure, and then yeah, I don't know, man, I don't know what else to say. It's really that fucking simple. And you don't even have to ping pong or whatever, you can just wait for that one perfect setup every week, blah blah blah, just know time frames, structure, that is the shit. That, yeah, it's just fucking so simple. So yeah, I don't even know what else to say. And here, for example, if we're looking at I'm just dragging this on, but after the M15 breaker structure, you can look for, no, because it doesn't matter, I didn't see the structure point now. But anyway, that wasn't a breaker structure, but whatever. Yeah, so I don't know, hopefully this just showed you how simple price action can be and should be. And yeah, I just don't really know what else to say now. Probably take me 5 minutes to figure out how to end the stream, but I will continue posting in the thread about more things, but just literally, like I've said 50 times already, focus on the structure, focus on the time frame. Yeah, I just drawn that so confusingly, but focus on the structure, focus on the time frames that you're working with and the relationships, and then the accumulation and distribution patterns that I've shared. Obviously, I'm not saying those all just W's this week. I'm not trying to say that there was L's this week as well. And I've only gone over the kind of the most easiest trades. There was more trades like here, and here, and here, and then here I went over that one, but that's a bit harder. But there was definitely losses, like there was a loss here, there was a break even here, and this is a break even, and there was another loss somewhere. Like my win rate is like 70%ish. But yeah, that's because I tried to ping pong. But if you just wait for these classic setups where time frames are aligned, then yeah, you'll win more and you won't have as many losses. But so yeah, hopefully this made sense and it helped someone. So yeah, I'll go over the entry confirmation straight after this. I'll go post it and show you the entry confirmation for this entry, and this entry. But I have shared it in the thread, so yeah, I just need to figure out how to end this, and then I'll probably do one next week. I'll let you know when it's like live price action, which would be scary because yeah, but whatever, YOLO. How the fuck do I end this shit? Okay, but yeah, I'll go post a thingy right now, and I will let you know when I'm doing it next week. So, what's just.